You heard my stat from FundStrat that showed that basically we've got, September stinks usually unless we're up big coming into September, then it's a good month. Does stuff like that matter?
It does matter. So this is 2021, very different year. So I actually have expectations for a super September. And that's really in the wake of the fact that we are seeing the jobs number last Friday really disappoint. And the fact of the matter, we missed by 500,000 jobs, that really allows the Federal Reserve to press pause. We were all expecting Fed Chairman Powell to talk about taper this month in September, not happening anymore, and that is going to be the paramount focus, not only just in this light calendar week, but for the whole month of September until we bridge over to the next earnings season in October. So super September, here we are, Sully.
Wow. Now, I asked earlier, our first guest of the program, a very simple question. I said, does it matter I'm talking about long term, Jeff, whether the Fed tapers in November, December, or January? He said no, because he's looking long term. What do you think, both long and short term?
Longer term, absolutely not. The fact of the matter, if they reduce their emergency purchase of $120 billion per month down to $100 billion, but I think the context that we continue to look for is this uncertainty. And everyone was really second guessing Fed Chairman Powell, but when you see a number like we saw last Friday, that type of disappointment or that type of uncertainty certainly is being amplified. So they have plenty of cover to be more prudent. And the one thing that we really have focused on is jobs. Obviously, the dual mandate that the Federal Reserve has is focused on inflation, but they changed and moved the goalposts on inflation. So back to the jobs, they have to be certain on this. So that's why I think this accommodative, ultra accommodative stance from Fed Chairman Powell continues, and the taper doesn't really taper down or reduce those payments till January of 2022.
Okay, and I know if you and I talk, we text. Also, I have notes, and I read the notes. And you are rolling back on some oil exposure, Chevron, ConocoPhillips. Why you dumping on the oil stocks?
Well, I think it's a big opportunity to rebalance. You're going into September. It's been a phenomenal year thus far, but right now you are seeing some weakness from a relative strength perspective. So to be tactical going into this month, we are reducing some oil exposure. It's been great to hop on the oil exposure, but now it's time to turn it down. We've added the semiconductors. So when you talked about NVIDIA earlier, that's a name that we like. We certainly look at Intel, AMD, some of these different names that may have more opportunity going into September. So it is important to understand what sectors you have exposure to, Sully, but more important, what sectors not to have exposure to, and that's how we're positioned for the month of September.
What's so attractive about the semiconductors right now?
They're revealing a lot of relative strength, so we really want to look for momentum. When you're trying to dance between the raindrops, obviously we've seen the S&P 500 up 20% year to date. We continue to seek and hunt alpha, and that's where relative strength can be an overarching theme. It's a technical approach, Sully. This is not a fundamental approach. This is a technical approach that we see strength on the charts.